Hey everyone, and welcome. If you're looking at the markets this morning, you might be thinking, pretty quiet. But trust me, that is not the whole story. Underneath that calm surface, there is some serious tension building. It feels like everyone is just waiting. So let's dig in and figure out what's got the market on hold.
Yeah, so that really is the million-dollar question, isn't it? Why is the entire financial world holding its breath? What could possibly have traders, investors, and even the big central bankers just sitting on their hands? Well, you might be surprised to hear. It all comes down to one single thing.
And if you look at the major signs, everything seems remarkably steady. Take oil, for example. West Texas Intermediate, that's a huge benchmark. It's just holding firm. This quiet is really the story of the market right now. But you know that feeling? It's that calm before the storm. It just feels temporary.
All right, Section 1, the market's big question. So what is behind this global pause? You might think it's some super complicated geopolitical mess, but nope. It's actually a single, really powerful piece of information that has the entire market laser-focused on one specific moment in time.
You got it. All of this quiet, this market-wide holding pattern, it's all about one number. A single piece of data that could totally change the game for weeks, maybe even months to come. So before I tell you exactly what it is, let's take a look at what this calm actually looks like in the numbers.
Okay, let's dive into our next section, a snapshot in numbers. We're going to do a quick tour of the market's vital signs so you can see this calm before the data for yourself.
First up, energy. West Texas Intermediate crude is sitting at $63.85 a barrel. Now, you know energy prices can go wild on any little piece of global news, right? So the fact that it's this steady, that's our first big clue that everyone's in a wait-and-see mode.
Okay, now let's pivot to another classic safe haven asset, precious metals. And what's happening here is pretty interesting. You could say that in the world of precious metals, a tale of two values is unfolding.
So on one hand, you've got silver, with a spot price of $37.88 an ounce. And then you've got gold, trading at a whopping $3,395.47 an ounce. Yeah, both are holding pretty steady today, but come on, their values are just worlds apart.
And this chart right here, wow. It just hammers home that difference, doesn't it? Look at that towering bar for gold, right next to that tiny little sliver for silver. That's not just a price gap, folks. That's a huge, flashing sign telling us where investors are putting their trust as a store of value.
Let's hop over to the currency markets. It's a pretty similar story there. The euro is trading against the US dollar at about 116. Again, no big fireworks. Just a little dip that really shows you that cautious mood spreading across the whole market.
All right, what about the bond market? This is a big one. The 10-year Treasury yield, which affects everything from your mortgage rate to business loans, is at 4.28%. Now get this. Look at the change from yesterday. It dropped by just 0.07 of a percentage point. That is tiny. The market is basically frozen in place.
And really, this stability right here just says it all. The bond market is kind of whispering what the rest of the market is screaming. We are waiting. Nobody is making a big move until they get that one crucial piece of information.
All right, let's move on. Section 3, the sector health check. So we've seen the big headline numbers are pretty flat, but what's happening underneath the surface? Well, if we look at different parts of the economy, we start to see a really fascinating split.
So this is really interesting. Check out the difference here. On one side, you've got the tech and communication sectors. They're just booming. We're talking over 20% growth year over year. Crazy. Pharmaceuticals also looking super healthy and expanding. But then you look at housing. It's sluggish, just completely bogged down by high interest rates and the fact that most people can't afford a house. It really is a tale of two different economies playing out at the same time.
And that brings us to our final section, and right back to our central mystery. Everything we've talked about, the stable commodities, the split personality economy, it all points to one thing. It's all about inflation.
So that one number that everyone is waiting for? It's the Consumer Price Index. You've probably heard it called the CPI. So what is it? Simply put, it's the US government's main way of measuring inflation. It tracks how much the price of all the stuff we buy, gas, groceries, you name it, is changing over time. And this is absolutely crucial because it's the #1 piece of data the Federal Reserve looks at when they decide what to do with interest rates.
And it is coming up fast. The data is set to be released at 8:30 a.m. Eastern Time. That is the exact moment this market pause ends and the real action begins. The clock is definitely ticking.
And believe me, the stakes could not be higher. This is not just some random data point. The Fed is going to be watching this like a hawk, and whatever this number is, it's expected to have a huge impact on which way the market goes. If inflation comes in hot, you could see markets take a nosedive. But if the number is cool, that could be the fuel for a major rally.
So there you have it. That's the state of play. An entire market just holding its breath for one single number that basically decides the cost of money. And that really leaves us with the big unanswered question, doesn't it? Once that number drops at 8:30 a.m., what happens next?